In this session, we're going to cover the CASELODE General Ledger product. Once you're in the Navigation Assistant, you simply click on General Ledger, and you'll see the assistant items for this product. I'd like to bring your attention to the control file first before we get into the product. You specify the fiscal year beginning and ending, and you can specify the current period date. The current period date only serves as a reminder that you may be making a date mistake while you're keying journal entries. Other than that, the current period is not used. However, all general ledger reports do depend on you specifying the fiscal year that you're actually reporting for. If you need a balance sheet for December of 2012, you need to specify the year of 2012, or any report in 2013 would work as you see the settings now. You specify the default cash account, and if you like, you can specify a financial statement header and footer, such as if you need to produce a balance sheet for the bank. You might want to say prepared without audit. In the file maintenance section, you have locations, departments, and timekeepers. Very few firms use this feature, but you can subdivide your account so that you can do a profit and loss statement, for instance, by location, if you have multiple locations, or by department, if you departmentalize your firm and you wish to track income and expense by department. The main feature of the file maintenance is the chart of accounts. We'll go to the list box and look at the accounts that are set up. And if you'll notice, the accounts are set up not necessarily in number order, although these are, but it's irrelevant as to what numbers you use, as long as you keep the order of assets, and then liabilities and equity, and then income accounts, and then your expense accounts. So just remember to keep everything in that order. You're allowed to budget your income and expense accounts. As a for instance, you might want to budget an account such as conventions and seminars. You have two ways of budgeting. If it's an income account, you want to be sure to budget it as a negative figure because income's credit. But on conventions and seminars, let's say that we know we're going to spend $10,000 this year. You can have it automatically spread it between 12 months. Or if you know the conventions and seminars are going to take place in certain months, you can come down and say, okay, in March, I know we've got $2,000 coming up, we've got a trip, and in July, we've got another $2,000, and in December, we might have $1,500. So as you decide what months you're actually budgeting for, it tallies up the total for the year for you. So keep in mind that you can budget all of your income and expense accounts. The type code is when you set up an account. If you press the F2 here, you'll notice that assets are 3, liabilities and equity are 8, income is 11, and expense are 13. But then you've got your 20s, which are title, 21, 22, and so forth, or your subtotals. They just have to be placed in the correct location within the chart itself. The balance sheet code only applies to a few items. You tell the chart what the last account is in the balance sheet and what the first expense account is, what the first income account is, which is your profit account in the balance sheet, and which is the account you're using for retained earnings. So only 5 accounts ever have a balance sheet code, and you specify whether an account is normally debit or normally credit. Also, if the need ever arises, you can change an account number as long as you keep it within the same category. Like you might want to change, for whatever reason, 7730 to 7731. You tell it, yes, you know you're changing a saved record, And if you'll tab through until this number changes, when you click save, all of the activity from the old number will follow through to the new number. So the chart is very versatile. And the other thing on the chart is that you can set up a special chart. Like if you need a chart just to track employee expenses or occupancy costs, you can do that and produce an actual P&L just for selected accounts. And we detail this very thoroughly in our technical reference manuals. The general ledger product basically is a receiver. It's sitting here and it's getting information throughout the day from your payment entry and time and billing, and from trust, if you integrate trust to the general ledger. All the bills that you run through accounts payable post to the general ledger, and if you're running our payroll, it posts to the general ledger. So you've got very little to key actually through the general ledger product itself. One example might be depreciation expense. Another may be bank drafts. If you have bank drafts for health insurance or life insurance premiums, and additionally you can key those through the bank reconciliation screen as you're reconciling the bank statement at the end of the month. But to show you an example of a journal entry, we'll just go into journal entry, tell it we want a new one. It automatically gives it an entry number. You have no control over that. And then you give it date of the entry, like 03/03/13, and it might be a journal entry. And in our case, we're going to pick journal entry and general ledger. So that means it's a standard journal entry and we keyed it directly through the general ledger. So we're going to give it a description. And this is the type of an entry that your accountant would give you. Once you have the description in, you pick the account that you're going to affect. It might be your law library, and it might be a credit of $1,500 for the depreciation. Now you need to expense that, and I'm just pressing the F2 key in this column to get a list of the accounts, and I can tab over and key in depreciation, and it gives me the account to expense it to. So you have to enter the debit and credit to offset so that your running balance always comes to zero. It will not let you save this entry and post it with it being out of balance. So once you have it like you want it, you save that record, you come to post journal entries, you tell it you understand, and it tells you the amount of debits and credits that are about to be posted. You tell it to update, and you realize that it's being posted to the permanent file, and the posting is complete. At any time during the processing, you can go into General Ledger Inquiry, and you can pull up any account that you might want to look at. The most recent entries are at the top. So if you click on that entry, this particular entry is Source 1, which means it came from Time Accounting and Billing, and it's a Category 1, which is a receipt. The description on this entry is Time and Billing Payment File 4000.001. You may have a situation where you've got a check that was paid out, for instance, to Duke Power, and it was your check number 5008, and it came from accounts payable. So you can look at any account to see if a particular item or items have been posted to the account. In reporting, you go to Trust/Ledger, and your first 3 or 4 reports or 5 are strictly listings of your chart, your location, your departments, your timekeepers. The journal entry listing is rather powerful. You tell it you want posted entries, for instance, as opposed to unposted, and you can pick it by transaction date or entry date. You should never try to use both sets of these dates simultaneously. You might want to see every transaction that was posted, for instance, between 3/1 and 3/31. If that's the case, you want to be sure to check all entry dates. So regardless of when it was entered, you would see all the transactions dated between these two dates. Now on the other hand, if you entered some transactions on a particular date, but you don't know how you dated them, this selection criteria would allow you to do that. It would show you anything entered on that date, regardless of how it was dated. Then you can pick one or all accounts, you can pick categories and sources, and you can order the list by a number of different methods. So keep in mind that that's a pretty powerful little report. The General Ledger report, we'll just take a quick look at a few pages, 03/01/13 to 03/31/13. This is the detailed report showing all of the entries that hit the ledger in the period that you selected with a previous balance, and then all the current activity, and then the balance to date. So it would go ahead and go through and do this for every one of your accounts. So that's the detailed ledger. And then you have the ability to print a trial balance, which is a very similar report, but dissimilar in other ways. 03/01/13 to 03/31/13. And we tell it all accounts. And this report actually shows the detail broken down between the debit and credit column. And it shows you your balance coming in. And at the total, it'll show you the net change and the ending balance. So it does this for every account or for the accounts that you selected. Once you close the detailed report, the summary report just pops up automatically. So you have beginning balance, debit, credit, net change, ending balance for every one of your accounts, but none of the actual detail that made up the debit and credit transactions. And then you go to the end of the report, and it's always important to note that you've got an equal amount of debits and credits. Your ending balance at any given time on the general ledger overall should be 0. That report also allows you to export it to Excel, like if you wanted to send it to your accountant, etc. The balance sheet itself should be run every month, and we'll pick April and tell it we want consolidated or unconsolidated, and tell it to include the profit. You can print the account numbers or not. In this case, we did print the account numbers. The balance sheet is going to show us all the subtotals that we have set up, the balance in every one of our accounts, and the main thing you want to pay attention to here is that your total assets should always equal your total liabilities. We have far too many firms that do not print the balance sheet on a regular basis. We have too many firms where the partners never actually see the balance sheet. And we obviously have firms where the assets and liabilities do not equal. And one of the primary causes of that is the fact that you may not have closed out the prior year. But we encourage you to touch base on this regularly, at least once a month, to make sure you're in balance, because it's a lot easier to find a balancing issue over a 2 or 3 week period than it is over a several month period. So the balance sheet should be printed every month. The income and expense statement should be printed every month. And we'll do that for the month. There's no point in doing any income and expense statement for the entire year. If you'll notice, when we print this report, we're doing it only for April. But when the report comes up, you'll notice that we have April here and we have year-to-date here. So the right-hand column is always intended to show you year-to-date, which is since the first day of the fiscal year stated in the control file. In our case, it's since January the 1st of 13. It shows you what percentage each account is to total income. So this attorney brought in 39.67% of the current month income, and this attorney brought in 60%. But it's a little different on the year-to-date, obviously. And at the bottom of the report, you see your profit or loss, current period, and year-to-date. So we encourage you to print that every month. If you like and you set up budgets, you can print a budgetary PL. For instance, you might want to run one for 04/01/13 to 04/30/13. And for the budget period, you would specify 4 as being April. And when the report comes up, and it is in landscape, it'll show you every account. It'll show you the actual and the budget and the variance. And on the year-to-date, it'll do the same, actual, budget, and variance. So this is a good report to see where you stand compared to budget. Another report that is very useful is the Comparative PL. It lets you compare any 2 accounting periods. That can mean any 2 months, any 2 quarters, any 2 years. In our case, we will compare April of 13, and our year started on 01/01/13. We will compare it to April of 12. And that year started on 01/01/12. So this report is going to show us a comparison between April of 2013 to April of 12. And then out here is going to show us a comparison year-to-date wise of January through April of 2013 compared to January through April of 2012. So this is a neat little report to show where you stand comparative-wise. We have a general ledger worksheet, which is primarily intended for you to give to your accountant. So what you can do here on the worksheet is just specify 01/01/13 to 12/31/13 and print this out and give it to your accountant along with your tax papers. And in rare instances, your accountant will actually use this report and write in your adjusting entries for debits and credits using your account numbers. Our experience over the years has shown us that accountants will generally use their own worksheet and tell you what the accounts are, but not necessarily identify your account. So sometimes you have to match up their accounts with yours. If you could get them to use this worksheet, then you can key their adjusting entries directly from the worksheet. If you find that you have posted something to the wrong account, let's say you expense something to the wrong account, there are 2 ways to rectify that. One would be to use a journal entry to adjust it out of the wrong account into the new account. The other would be to go to year-to-date corrections and simply change it. Just check I understand. You go up and find the record that you need to change. You can search for it by amount. You can search for it by date. And you can change anything about that record and then just save it. Just keep in mind that you don't want to change the dollar amount or move it from debit to credit without thinking through it thoroughly, because it could throw you out of balance. Another good feature of the list box in this screen is that if you're looking for a particular entry, you can just tab over to the debit amount and search, or tab over to the credit amount and hit the minus key and the amount, and it will actually order that screen by the amount. Or you could tab over to the check deposit number and look up something by a specific check number. The last feature we'll cover will be the year-end closing. Generally, it's a few months into the new year before your accountant actually has your tax returns ready for the prior year, assuming you don't have to file an extension. But once you're ready to close, you go in and make your adjusting journal entries based on what the accountant gave you, and then you come to year-end closing. You tell it you understand, and you specify the year you're closing. You may be, for this particular scenario, you may be into April or May of 2014, but you would be closing the prior year. And then you have the choice of either retaining or removing your historical data. We strongly suggest that you at least retain the year that you're closing so that you can run comparative P&Ls between that year and the new year. If you don't want to remove any data, you can actually change this back to like 12/31/1950 or whatever. But this scenario would dictate that we're going to remove anything older than 12/31/2011. And then once you tab through, you just click Close Year, and it makes the entries for you to the account that you've designated as a retained earnings account. Once that has been closed, you can go into the retained earnings account and find the entry that the system actually made for you. If you'll notice here, this was actually closed as of 8/28/12. So this is a retained earnings account. It's a one-sided entry that the system makes for you to keep you from having to make a one-sided entry. So if you have any questions on this, please let us know. Call us at CASELODE, 864-346-4486, and we hope you're enjoying this product.